let's talk about the Chaikin Money Flow, or CMF, in short, as the indicator is named and called in the trading community. What is this indicator? What is it based on? What does it represent and how to use that? All in this video. First of all, where do you find the indicator? Indicator sections, volume, and the very first one on the list, Chaikin Money Flow, comes with a default of calculation over the 14 periods. You can of course adjust that here, choose the style and the thickness of the lines, choose your visibility preferences, and add levels if you need. I love to add the 0 simply because the whole indicator is based on a read above or below the 0. Click OK. I already have the indicator, so I'm not going to duplicate it. Click OK, and this is what you will get. Again, I love to add the 0 line. It makes it much more easier and visible when it comes to trading decisions. So the CMF combines in it both the price and the volumes calculation, mixed it up over a selected period, in our case the 14, and gives us this output. And the usage of this indicator, it basically it comes to help us to find the places where there is accumulation, where the buyers are likely stepping in the game and likely to take a control, and distribution, where the buyers get rid of their position and sellers pick up the opportunities. So the idea here is to find the places where the read is above the 0, like here, and the market makes the following expected rallies based on the price and volumes once again, and the places where the market, the CMF goes below the 0 and actually causes the price drops. So one of the most, for me, from my point of view, powerful methods here is when the cross happen and there is no big move on the price. What do I mean by that? Look what happens, for example, in that case here. See where the cross to the below the 0 happens when the market already made a significant move. On the other hand, here we got a significant rally and then cross down, but look what happens here, right? There was some sort of a slow momentum, some sort of consolidation, and then and only then we regain the momentum. So while the first price cross below the 0 after a range might be a false alert, sometimes the second one usually is very strong, and you can see here it happens when the price is actually not making a significant move, which gives a bigger probability to enjoy from this momentum. And this is a very strong CMF cross, and the same is applied like here, for example, after a range, a beautiful cross to the upside, the price range is not significant, which allows us to enjoy with higher probability stronger moves. Another very strong sign that the CMF indicator gives us is when there is a divergence. That means the price and volume together give us some sort of alert that the market is slowing down and a reversal is possible. That happens at the end of a trend, a bullish trend, for example, when the market is still managed to make higher highs. But if you compare the same highs on the market with the highs on the CMF, you would see that the highs on the CMF are actually going down, indicating bearish divergence, and that a reversal, I would say, very possible.